We don't get too caught up in trying to predict steepness or shape or where exactly the economy is going to be. We're looking for companies that we think will thrive regardless of the environment. And they're market leaders, they're in growing categories, they've got good balance sheets, they've got management teams with skin in the game and experience to help them get shepherded through that. That style, particularly the focus on downside protection. I mean, we're looking for upside, but we're also looking for downside protection, in particular around good balance sheets. Those traits tend to help companies get through not just tough times, but actually accelerate competitive advantages. So instead of getting too caught up in predicting, well, when exactly do we think this end, how steep will it be, we're more directionally focused on, all right, well, look, do we think that this broader category is going to continue to grow? Do we like this business's competitive position within that context? And if this drags on, is it possible they may end up even better for it? And so that's how we try to think about it. We're not oblivious to macro risk, certainly, but at the same time, we're not trying to lean into something where we don't think we have an edge. We think what we're good at is breaking down business models and understanding reinvestment potential. And for people who think they're good at trying to make big macro calls, I'd say good luck to them, but we try to focus on where we think we can add value. Twilio is a business that we followed for over a year. If you're not familiar with it, Twilio provides the communication platform that makes Uber work. So if you've ever messaged an Uber driver, made a call, that flows through Twilio's platform. They basically just take friction out of communication. It's run by Jeff Lawson, lots of skin in the game, super culturally focused guy, net revenue retention north of 120%, fantastic economics. Once they're in a business, they improve usage with the core product that they have, but then they cross-sell and upsell really effectively. So there's a lot to love, but it was just really expensive for a long time. And finally, during the COVID crash, it got cut more than in half in just a span of a few months. We opened a position around $78, and we've roughly tripled our money on it in 3 months. And I certainly wasn't expecting that kind of rebound, but it's a good example where we were disciplined on identifying a business that really fit all the things we're looking for, being disciplined on price, continuing to watch it, and then when you get an opportunity like the steepest market drawdown in history, what exactly are you waiting for? And to complement that too, you had central banks and governments around the world just firing cannons of stimulus into the economy. So you put all that together, and was it harrowing? Yes, but there were some really great businesses selling at very attractive prices for a while there. I wouldn't say I'm rooting for it to happen again, but it was kind of a once a decade event, and I feel like if you're not buying in that scenario, I don't know when you are.